to have the Director, Development Finance, Mr. Philip Yila Yusuf. He was the Managing Director of Nicel Microfinance Bank, and he's been in the Central Bank of Nigeria since 2011. He holds a Bachelor of Engineering degree in Electrical Electronic Engineering from the Federal University of Technology, Owerri. He's an alumnus of the prestigious Harvard Business School, Boston. He has attended several executive courses at Oxford, Harvard, Kennedy School, and Northwestern University. We also have with us from the Central Bank of Nigeria, a representative from the Anchor Borrowers team, and his name is Mr. Chinedu Zephaniah. He's an accomplished banker and public servant with decades of commercial banking experience and regulation. Currently serving in Development Finance Department of the Central Bank of Nigeria, he has participated in several formulation and implementation intervention policies, including the National Finance Inclusion Strategy for Nigeria, the 220 billion Micro, Small, and Medium Enterprise Development Funds, and the Anchor Borrowers Program, as earlier mentioned. In June 2013, he was awarded the European Union ACP Scholarship to participate in the 19th Boulder Microfinance Training Program in Turin, Italy, and later selected for the Alliance for Financial Inclusion, sponsored by the International Exposure, sponsored by the Reserve Bank of South Africa and the Central Bank of Kenya. We also have in our presence Dr. Muda Yusuf. He's the Director General of the Lagos Chamber of Commerce and Industry. He obtained a bachelor's and master's degree in economics from the University of Ilorin, Nigeria, and University of Lagos, respectively. He holds a doctorate degree in business administration from Swiss Business School, Switzerland. Dr. Yusuf has attended various prestigious courses, conferences, seminars, both locally and internationally. He was a delegate to the Commonwealth Business Forum in 2011, and he has also attended the Advanced Management Program of the Lagos Business School. He has also participated in the Conference on Management of Business Associations in the United States. He's a member and delegation of the World Trade Organization Ministerial Conference in Cancun, Mexico, and he has participated in several conferences all over the world. You're welcome. Mr. Alibio Su is the Chief Risk Officer of First Bank of Nigeria. Prior to this appointment, he was the Chief Risk Officer of Coronation Merchant Bank Limited. He served as the Chief Credit Risk Officer at African Development Bank between 2011 and 2015. And he was the Group Head of Credit Policy and Deputy Chief Credit Risk Officer at the United Bank for Africa between 2006 and 2011. He is a chartered accountant with over 28 years post-qualification experience. He obtained a Bachelor of Science degree in Industrial Relations and Personnel Management in 1990 from the University of Lagos. He has a master's degree in International Law and Diplomacy, also from the University of Lagos in 1997. He also holds a Master of Science degree in Development Studies from the London School of Economics in 2006. He's an alumnus of the Harvard Kennedy School of Government. Mr. Aranonu holds a Bachelor of Science degree from the University of Nigeria. He is also a chartered accountant. Mr. Aranonu is the Executive Director, Large Enterprises, Bank of Industry. He is a graduate of the Advanced Management Program of Stanford University, California, United States. He has attended various business leadership programs in the Harvard Business School, Massachusetts, Chicago Business School, as well as Cranfield, which is located in Milton Keynes in the United Kingdom. He has attended several training programs in Citibank School of Banking, Long Island City, New York, Chase Manhattan Bank, New York, Mellon Bank, Philadelphia. His forte is credit and corporate governance. He's licensed by the IFC, which is an arm of the World Bank, to train company directors on corporate governance. He has over 27 years banking and financial consulting experience. He has served as the executive director in global and international banks. One of them is now Access Bank. He is, as I mentioned earlier, in charge of large enterprises for the Bank of Industry. Welcome once again to this webinar. At this juncture, kindly permit me to introduce once again our host and moderator for the day, Dr. Tunde Popola. He is the Pioneer Managing Director, CEO, CRC Credit Bureau Limited. You're welcome, sir.
Thank you very much, Peggy, for the kind introduction of myself and our very distinguished speakers this morning. Good morning, everyone. My name is Tunde Popola once again, and I want to welcome all of us to this very interesting session today. I'm your host today, and I'm also the moderator of this event. So I'm wearing two caps this morning. So I will have to first of all welcome you as the host, and then I will introduce the subject matter for our discussion this morning. Let me express my appreciation to our keynote speaker, the Director of Development Finance of the Central Bank of Nigeria, Mr. Philip Yila Yusuf, and all the other three speakers that are going to be sharing and expertise with us this morning on this important subject. This is the fourth in the series of our webinars that we've organized since March 2020 when the lockdown commenced and a new normal was foisted on us by nature and by circumstances. But you know, as human beings, we have emerged from the experience of the lockdown with some gains and with deeper insight about life and living. So we should not see coronavirus pandemic as just totally negative. As we commence this webinar, I'm excited to say that over 1,500 people have registered to attend the session. The last webinar we had in August had over 1,200 people in attendance. And we know that if we are to organize a physical meeting, there is no way we could have this kind of attendance. We also have people attending this session from all over the world. Have people, joining us from the US, from Canada, from the UK and South Africa. So it's cut across continents. Let me say that some time ago, we created a vehicle called You and Credit. We use the vehicle to provide formal financial education to Nigerians. We use that to sensitize financial institutions, creditors, consumers, and businesses, especially small businesses that are normally called SMEs, on the importance of responsible lending and responsible borrowing. We are happy with the modest achievements we have achieved to date using this medium through partnership and direct offering by delivering free credit education to a lot of BMOs and mounting very special events such as the one we are having today. CLC itself has earned its place among great business brands in Nigeria in its very short history. We obtained our license to operate as a credit bureau in 2009. And since that time, we have, in the last 10 years, dominated the industry on various fronts, including but not limited to product channel development, customer enlightenment, and education, and thought leadership. In terms of product development, we are in the forefront of the array of products and services we have introduced to the marketplace to support our customers through the entire credit creation and credit management value chain and life cycle. And so in specific, you see that our products and services help our customers to be able to identify the right set of people and customers they should be doing business with. Our product assists our customers to review and access credit applications with facts, with promptness, and to be able for them to process large number of volume of our credit applications. We are helping our customers to monitor the portfolios of already disbursed loans and credits. And then we also help them to manage default and collections with scientific analytical tools. Finally, we help our customers to obtain greater insight into customers' behavior through predictive analytical tools. So we are assisting all the customers. We have over 1,500 institutions on our database. We have about 40 million records as we speak. And that's large, but we have to keep on growing. We also provide opportunity for you as individuals to be able to monitor your credit report and your credit score. You can do that by going to our website, or you can do that by using your mobile. You can download CLC mobile from Apple Store or Android. So whichever iOS, whichever you have, to be able to, get across and check your credit report or check your credit score. Today, I want to welcome you once again. As a moderator, the essence of our program today is on intervention funds. It's on CBN intervention funds. And we have three objectives for doing this webinar, this topic today. We want to increase the awareness of Nigerians on the various CBN intervention funds that have been made available to Nigerians before COVID and during COVID. We also want to be able to see how impactful have these funds been, and people sharing their experiences on the challenges they have encountered and how it has helped them to solve their business problems. The third objective for this session is to be able to see whether we can come up with certain recommendations that will enhance the efficiency, the effectiveness, and the impact of these intervention funds. So I welcome you once again. That will be my introduction to us this morning as the MD of CLC and as your host. Now I will quickly move to the moderating part of this event. We all know that credits to the private sector can come from various sources. The two most distinguished sources that are very familiar are from financial institutions and from government. Over the years, we have seen the involvement of government using instruments of fiscal and monetary policies to support access to funds. For fiscal policies, that's always the domain of the Ministry of Finance through budget and taxation. Today, we are going to focus on government using monetary policies through the CBN to give funding support to businesses in Nigeria. Before COVID-19, we know that the present CBN management has advanced the use of government special funding to various sectors of the economy through its developmental mandate. The question is, why do governments establish and implement intervention funds? The intervention may be necessary because everyone knows that no government leaves its economy entirely to market forces. In economics and financial theory, they will tell you that everybody that is looking for funds must always be able to get funds at equilibrium. In other words, the market will always be cleared when you have the right prices. But we all know that in reality, because of so many factors, that theoretical postulation do not hold. The major assumption is that there must be perfect market and perfect information. And we know that there's nothing like that in the real sense. In another way, you see that financial institutions, they decide to, even lend funds, even when they have the funds. They may decide to choose the risk they want to carry and exclude some specific individuals or specific businesses, even some specific locations or geographies from benefiting from their credit rating offerings. So as they choose their risk, they choose their market, they choose their focus. And then there are so many factors distorting the economy. So in other words, people will need funds, businesses will need funds, and they may still not be able to get it. Besides, you realize that most times the industry, the financial service industry, do not have enough resources to satisfy the quantum of demand for funds. The Pricewaterhouse 2020 SME survey shows that only 1% of the total commercial banking credit went to SMEs in 2018. The National Bureau of Statistics also reported that less than 5% of SMEs have been able to access adequate funds for working capital and for funding business growth and expansion. In Nigeria today, less than 5% of the 41.5 million MSMEs in Nigeria have access to credit from the former financial institutions. To capital, Pricewaterhouse in their research also indicated that the financing gap for SMEs in Nigeria amounts to about 617.3 billion annually. And the question is, who will fund this gap? Where will this gap come? How will this gap be mitigated? Yet we know that every viable business idea and business enterprise should not be deprived of access to affordable finance. CBN intervention fund seeks to help address this funding gap. Let me quickly point out that Nigeria's banking credit to the first sector has risen to about 26 trillion by December 2019, from about 8 trillion in the year 2000. However, from the available data in our repository as a credit bureau, we observe that credit penetration is still very low in Nigeria. It's still at about 14%, going by the 2020 World Bank's Ease of Doing Business reports. In some cases, we also know that cost of accessing funds from commercial banks can be very prohibitive and discourage a lot of small businesses from approaching the financial institutions. And of course, there are government socio-economic objectives that must be met to address poverty, to reduce employment, to generate financial inclusion and providing social safety nets, which funding from private and commercial banks will not be able to address because that's not their own focus. So intervention funds therefore become a social obligation and public policy necessity for most governments. In fact, in most free enterprise economies, government intervene by employing both the fiscal and monetary policies. For monetary policies in Nigeria, for instance, the CBN is the granting and coordinating institution, and they deliver, all these funds through a lot of intervention, windows. You have, for instance, direct subsidies involving concessionary or special interest rate or interest rate ceilings. You also have directives to commercial banks to compulsory fund some specific sectors of the economy. If, for example, SME, through either moratorium or with incentives to the commercial banks, or through outright compulsion, as we see now in the LDR that is in operation in Nigeria. Sometimes government give grants and disburse grants, which institutions or businesses are not expected to pay back to specific sectors. In some places, in some occasions, it can be guaranteed lending. And this always involves encouraging the financial institutions to lend to specific sectors or businesses backed up by government guarantee. The whole essence is to encourage commercial banks and deposit money banks to be able to lend to these people. And once there is a default, government will repay. Sometimes it's about setting up special purpose vehicles. Like we have seen in the case of Nigeria, we have the Bank of Industry, we have Bank of Agriculture, we have Federal Mortgage Bank, we have Nexim, we have NESA, we have NESA Microfinance Bank, and so many numerous ones like that to intervene. And then sometimes it can be direct lending through special purpose funds, as we see in the CBN intervention funds. Most of the CBN intervention funds are routed through the financial institutions. However, some analysts believe that government should not have any business, intervening and, providing all these funds to businesses. First, there are so many concerns that have been expressed. People and businesses with some projects, they believe will always find their level. And if people have very credible and bankable projects, they will always get, funds. Essentially, that truly most business funded with GIF are not deserving and do not come out to become sustainable businesses. Some people say that government objective in intervention is always to help those businesses that grow and then to create jobs, to reduce poverty and contribute to economic growth and development. But the impact is always very limited. That the totality of the funds do not make significant contribution and impact to the economy. Some people say that most of the intervention funds are to meet political expediency rather than for socio-economic impact. In fact, government has always been accused of not properly thinking through some of the intervention funds, and therefore they do not meet the objectives. Some people say that the beneficiaries of such funds see it as national cake, and therefore the repayment pattern is always very low, and the level of non-performance of such funds is very low. They give example of NAFON as an example. Then some people also say that using public funds to support a small segment of the population in the midst of scarce government resources, and for governments that have so many things to attend to in education, in health, in transportation, in infrastructure, that is unfair. Such funds will give more impact to a wider proportion of the population if deployed to more beneficial projects. So going by all the above, some analysts believe that rather than embark on governments releasing funds to fuel businesses, the focus should be on financial reforms that improve the efficient functioning of the financial and credit markets directly. And such reforms will include, for instance, increased creditor protection so that they can lend more, enhance the functioning of the credit infrastructure like the credit bureau with compulsory means of identification for everyone and every business, and then make it easier to obtain information that will help them to be able to lend to as many as possible. So these are some of the concerns that people have. But notwithstanding all of this, we all know that there is need for government intervention funds. As a credit bureau, our interest is to see how we can help as many as possible to benefit from the government intervention funds and assist government to realize the objective of the funds. We want to be able to help in providing relevant data and information to identify those who are qualified for the funds. Mandatory checks at the credit bureau will help to increase access for those who deserve and are qualified for the funds. As at now, most of the intervention funds, especially by the state government, are disbursed without reference to the credit bureaus. Even after the disbursements, such data are not submitted to the credit bureaus. So what happened then is that wrong people may be the beneficiaries. Some people who are not targeted may be the one that really benefit. Then it also could then encourage non-repayments, as they know that those credits are not reported to any other institution. So we therefore advocate that data of beneficiaries of all intervention funds from all government agencies should be submitted to the private credit bureaus. And we know that if this is done, it will help improve collection and repayments, as it will instill discipline into the repayment process. We also know that if that is done, it will improve access to non-government funds for credit beneficiaries, because it will assist them to mainstream into the normal financial system. Anybody who is able to repay government loans, it's very clear that if such person borrows from the private sector, he will definitely repay. So, distinguished ladies and gentlemen, without further ado, and I want to go to our speakers. We are blessed to have with us today the Director of the Development Finance Central Bank of Nigeria, Mr. Philip Ila Yusuf, whose department coordinates the CBN intervention funds. He will speak to us, and then he has with us Dr. Chinedu Zef, who also stay with us throughout the session to make presentation about the various intervention funds that are available, and then take questions and comments thereafter. We also have the representatives of the business community, led by the DG of Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf. He will be giving us the perspective from the business community. Now we have two gentlemen from the banking system. We have Mr. Alanonu, Mr. Simon Alanonu, the Executive Director, Large Enterprises from the Bank of Industry, whose department also superintend over intervention funds that are through the Bank of Industry. He will be telling us the various schemes that are available. And then we have the CRO, the Chief Risk Officer of First Bank, who also is the chairman of CRC Credit Bureau, Mr. Olusegun Alebiosu. He will then be talking to us about his experience, the experience of First Bank on the intervention funds. So I welcome you. At this stage, I want to say that I want to give the floor now to Mr. Yusuf, Mr. Ila Yusuf, to lead us and have some level of address for us. Mr. Yusuf, good morning, sir. You're welcome.
Morning, and thank you very much, Dr. Popola. I want to thank you for giving me an opportunity to come and speak to you. Unfortunately, I'm part of the team that's going to be negotiating with Labour, but I have somebody competent, Dr. Zef. I don't have a PhD. I've just looked out the room, Dr. Popola, Dr. Zef, and others that are all PhDs. So Dr. Zef is going to do a good job. But I just want to make some comments. Intervention funds are available to be able to support the economy. The role that the central bank plays is only a complementary one. I get all sorts of questions. Why is it just the monetary authority that is pushing out a lot of money? What is the fiscal doing? Our job is just really to complement the fiscal authorities, and we do work hand in hand. Section 31 of the Central Bank Act, allows us to carry out developmental roles, really around, supporting real sector development, and also financial inclusion, having them have access to affordable finance. We've been doing this for a very long time. We have 24 interventions in our portfolio. We've recently increased it. We released about 4 last week. 1 on gas, 1 on housing, 1 also on, I just lost my thought there. 1 on gas, 1 on housing. Okay, anyway, Chinedu is going to give you a broad range of the interventions that we have. But really, CBN has been playing this role for quite a long time. We've seen successes. Yes, I've listened to your presentation. There are some concerns around, repayments, but that's the reason why we've established, we've worked with the other authorities to ensure that the credit bureaus are in place. And all the interventions we do, the credit bureau does play a key role in trying to ensure that those who have access to it are certified and the kind of information that we get. I also want to speak around what we've done post-COVID. There are about 3 or 4 key, though you have quite a lot of participants here who want to know, and Chinedu will talk about it. What we've done is to try and ensure that we can help small businesses and also individuals who've lost their job. So we started by, releasing a 50 billion targeted credit facility. That we've increased to 100 billion. As we speak, as at today, 73 billion has been disbursed to over 140,000 households and small businesses, just to ensure that, they get some form of support. We also released a 100 billion healthcare facility to ensure that, look, our hospitals, as we know today, are really struggling. Most of them are not in good shape. To give you statistics, Ghana has 2 tier 5 certified hospitals. Nigeria has none. So we released a 100 billion funding for the healthcare industry. As we speak, close to 50 billion has been disbursed to both pharmaceuticals, hospital homes. In fact, we funded one funeral home. We've also ensured that there's access credits to manufacturing. So there's a 1 trillion portfolio. Dr. Muda is here. We've been working with the manufacturers. As we speak, we've released close to 300 billion to different, both agri, different sphere of the manufacturing, those who are into food processing and co. We've also done something significant. We've reduced the interest rates on all our interventions. It used to be 9%. We've reduced it to 5% from now. We've also granted an additional moratorium of 1 year. So there's quite a span of things we've been doing over the last 5-6 months to just ensure that we ensure we give support to the economy. But Dr. Chinedu is going to give you line by line detail of all the interventions. I want to thank you once again for giving me the opportunity to speak at this webinar. Thank you, Dr. Popola. My colleague Chinedu will take over and then give you a perspective of the bouquet of products that we have. Thank you.
Thank you so much, Mr. Yusuf. Thanks you for sparing time to be with us, despite the fact that you have to go and join the negotiation team. We wish you all the best. We want the viral economy. We don't want any strike to come to Nigeria at this time. So all the best as you go. That we want to just say a big thank you. I know how difficult it is at this moment. So quickly, then I will then allow Dr. Chinedu Zef to present Mr. Yusuf's position. Dr. Zev, are you ready?
Yes, I am. Yes, I am. When you speak after my director, you have difficulty wearing the big shoes. Within the short time he had to speak, he ran through literally everything I would want to tell our listeners. If you can see the slide on your screen, 1 second. Can you see the slide on your screen?
Yes, we can see it, please.
Okay. So within the short time I have to speak, I'll just run through the mandate of the Central Bank of Nigeria. This would put paid to the question, why does CBN have to intervene in real sector. Dr. Bobola had mentioned it, a lot of schools of thought. We will provide our own perspective to that. We'll run through why we're doing development finance interventions, what specifically are the areas, why do we go to those areas? Time permitting, I will speak about some of the impact. And then because I'm from the Anchor Borrowers team, I will just beam a spotlight on ABP, what we have done with ABP, the expediency of ABP, and then the future. I will conclude by giving some outline of the prospects. So this slide goes to say, why is central bank in existence? What does the CBN Act say that allow us to do development function? Governor Emefiele in his administration has taken development function to the Rubicon, literally. People are wondering why we're doing what we're doing. To state the facts, clearly as they are, this is a key mandate of the Central Bank of Nigeria. We are supposed to promote a sound financial system. And in doing that, we have to stimulate finance to our agri sector. We have to ensure that you don't have those digits you post as GDP on an annual basis, and then people are still poor at the base of the economic pyramid. We need to facilitate investment to critical infrastructure that would aid us to develop, and then we need to deepen finance to specific focus sectors. Just to give you an overview, what we do when we say we're doing development finance, we try to increase the impact. We achieve employment elastic in some sectors of the economy. We diversify the economic base of the economy. We boost capacity of MSMEs in priority sectors. So do we do everything? Because we are trying to do development finance, is it everything? Is it open the door and everyone comes in? No. Our focus is on agriculture, manufacturing. We have specialized products for MSMEs, of course, infrastructure, and then power. Let me say that these are the sectors that when we intervene, we have a wider range of effect in the economy. So under agriculture, we have 3 cadres of interventions. For the top tier, those are the big borrowers in agri. For the middle tier, people at the middle of the economic pyramid. And then for those at the base where you have the Anchor Borrowers Program, lending farmers as little as 200,000, 117,000, reaching over 1.6 million farmers in a single season. So if we have been doing this, what is the level of impact that we have achieved? Particularly speaking about the new norm post-COVID era. The entire sphere of impact has cut across, food security, helping people to get jobs, ensuring that livelihoods are supported in the face of the economic disruptions we saw post-COVID. The director did speak about the TCF, where the bank set out a 50 billion facility. And before you knew it, we had application worth over 500 billion on our hands. We had no option but to increase the limit of that facility. Under the Anchor Borrowers Program, we have created well over 5 billion jobs. I mean, this is properly documented. In this 2020 West season alone, we financed over 1,500,000 farmers to cultivate various commodities. In the energy sector, we have created over 250,000 jobs, and so on and so forth for other sectors. So in all, we've disbursed over 1.5 trillion naira in terms of facilities. And as we speak, 125 billion repaid, and under the Anchor Borrowers Program, and another 1.25 outstanding until the end of the season when these farmers will pay. So in percentage terms, agriculture is really the main focus, 40% of our intervention. industry, MSMEs, people that will lead the industrial revolution in Nigeria, have gotten a total of 33%, and then services 27%. So I just want to round up the impact section of my presentation. In all, 2.5 million projects financed. Under the Anchor Borrower Program, we have seen rice yields moving from the traditional 1 ton per hectare to 2.3, up to 5 to 7 tons per hectare. We have seen financial inclusion rates gradually increasing from an era where in some regions of the country, financial exclusion was up to 60, 70%. We have seen tremendous improvement on that. I dare say that there is a direct nexus between economic deprivation, poverty, and insurgency. At the time we started financial inclusion, the Northeast, properly documented reports have it that the Northeast had the highest exclusion rate. I mean, there is no point belaboring the fact that this was why it was easy for insurgency to ravage that region. So part of the impact of what CBN is doing in development financing is that we've seen financial exclusion rate drop significantly over the years. We have seen massive reduction in our food import bill. As you know, part of the central bank's mandate is to manage the external reserve of Nigeria. If we can produce food items and we continue to import them, we will have both foreign exchange and domestic economic crisis on our hands. So this is a critical area that the central bank has expended a lot of effort, and we're beginning to see huge, huge results. So to date, we have several rice mills, several cotton mills, all manner of industries established, because as you know, when you create the market, finance moves naturally to those areas. So we're beginning to see a lot of factories who were overseas exporting items to Nigeria, relocate to Nigeria to establish those factories and create employment for our people. So that's for me cumulative of the impact from the CBN's different development finance interventions. As someone in Anchor Borrower's program, I just want to throw some spotlights on ABP, speaking specifically about why the CBN is engaged in this, why we consider it a critical intervention at this stage of our development. I did say that in a pyramid of different economic agents, at the base are the people who have literally $2, $1 a day. You heard the report that Nigeria is the poverty capital of the world that was published in 2018. A sensible central bank would make sure that most of its interventions are targeted at those people at the base of the pyramid. And so the Anchor Borrowers program is probably the flagship of the interventions of the bank. And what we are trying to do is not just to finance crop production, but to use it to achieve other mandates of the bank. So there are 17 focal commodities, those commodities that we see the country spending a lot of foreign exchange in importing them. Those commodities have been taken up seriously from research through production to processing, marketing, the entire value chain, just for us to ensure that those commodities are produced in Nigeria sustainably. So we have the private anchor, the prime anchor, the public sector driven, and of course, the most common one is the association. Any of the models work for us for people who are interested in participating under the Anchor Borrowers program. Just for us to mention it for our participants, we are interested, those focal commodities include cassava, cotton, fish, maize, cowpea, rice, poultry, livestock, oil palm, cocoa, tomato, sorghum. I'd like to conclude by saying that we already had some developmental challenge in our hands as a nation at this stage of our economic history. COVID-19 came and even worsened it. But you see, for us in the central bank, this is an opportunity in disguise. If all the stakeholders will come together and say, look, nations are running for safety. economic activities are disrupted. Nations who would gladly export pharmaceuticals, export food to other nations are saying, no, look, wait a minute, let's feed our citizens first. Let's cater for the medical needs of our people. So if these nations are doing that, this is the right time for every citizen of Nigeria, all the stakeholders from the fiscal to the monetary authorities to focus on what we can do to ensure that we provide not just enough food, enough pharmaceuticals for our people. This is when we need to strive so that all these developmental activities are supported on sustainable basis. So for us at the central bank, we'll continue to support these activities using small businesses, micro businesses. We'll continue to focus on the priority sectors of the economy, particularly agriculture and manufacturing. And just like the director said, through a range of direct policy interventions, indirect policy interventions, and direct funding of these sectors, we hope that we'll continue to put the economy on the right path, and we'll take advantage of COVID and turn its difficulties to opportunity. I want to thank you very much.
Thank you very much, Dr. That's very brilliant presentation within a very short time. I'm happy that you are able to, summarize for us the various impact of the government CBN intervention funds and the various critical sectors of the economy that these intervention funds try to touch. So you made a presentation of about 1.56 trillion already disbursed, 125.8 billion already paid, 2.5 million projects have been financed, and over 5 million jobs have been created. You also told us that this has also assisted to raise the financial inclusion rate to about over 63%. And of course, the priority sectors that have been covered are agriculture, manufacturing, and currently now you've gone into health sector as well. Aviation is there. And then of course for agriculture, the anchor borrowers is the in thing that everybody knows about. So I really want to thank you. I guess there will be more conversation around your presentation. A lot of questions have started coming in. People are asking, how are they going to access these funds? So please prepare to let us know how people can access the funds. Maybe you just give generic recommendations on how they can benefit based on sectors. But I'll come back to that after the presentation by other speakers. Let me then quickly go to Bank of Industry, who are also active participants in the intervention funds. So Mr. Samson Aranono will be the speaker to us this morning. Mr. Aranono is the Executive Director, Large Enterprises, and his department has responsibility for intervention funds at the Bank of Industry. The floor is open to you, sir. Mr. Aranono.
Thank you so much, Dr. Popola. I want to thank the Almighty God for the privilege He has given all of us to be alive and to be part of this kind of program in a challenging global environment. We are grateful to God that we are alive. Those who are dead cannot participate in a webinar. So I'm grateful to God. I know that you are also grateful to God. I want to start by thanking the Central Bank of Nigeria, starting with the governor of the Central Bank, Dr. Godwin Emefiele, and of course the director, DFT, the Women Finance Department, Yusuf, and all the members of the team, including Dr. Zef, for the confidence that they have on Bank of Industry. We are only fund managers, and if they don't have confidence in us, they wouldn't release so much funds to us to manage. And so we are not fund owners, we are only fund managers. And project implementation is what we oversee, monitoring, and then, of course, we ensure that the funds are returned back to the fund owner, the Central Bank of Nigeria, and ensure that through joint monitoring of projects, which we do with Central Bank officials, that the projects are actually implemented and that the impact is the objective is fulfilled, and that the funds are returned back to the Central Bank of Nigeria. That is the essence of it. So I'm grateful. Many people don't know that Central Bank of Nigeria owns 40% of Bank of Industry. This is a father giving to the son part of his fund, saying, we trust you, we know you will do a good job. And by the grace of God, since 2010, we have been managing several intervention funds for Central Bank. Some of the ones I'm going to share with you started way back in 2010. Some of them way back just 2 years ago. Some of them, started as late as a year ago. So it's a continuous process, and the confidence of the Central Bank remains strong in Bank of Industry, and we are very grateful for that confidence that they have on us. Now, I want to quickly share just about, you've heard from Zeph, there are many funds that are managing that they have floated, so many intervention projects. So I'm going to share only 4 that we are managing in Bank of Industry. And hopefully that will be, those are quite huge. Some of them, like I said, have been running for nearly 10 years, and some of them as young as about a year old or 2 years old. Now, the first one, which is actually a very key one, a major one, is what we call the Power and Airline Intervention Fund. Otherwise, we call it PAIF as an acronym. That Power and Airline Intervention Fund, which has been running since 2010, is expected to run out by 2025. So many companies have benefited from it. Companies in the power sector, we have disbursed 307 billion out of this fund, 307 billion to date. And there are 2 major facilities in them. One of them is for a long-term loan option for new projects. Another one is for refinancing of existing projects that have expensive interest rate tied to commercial banks. With the interest rate is 9%, and it has a maximum tenure of 10 years insofar as it does not exceed 2025, which is the understanding. And that we have done, we have supported so many projects in this area. Like Zev mentioned, what people don't know, in the power area alone, we have, through these projects for which the funds belong to Central Bank, there's 1,432 megawatts of electricity has been generated as off-grid captive energy, captive power. And there are companies, 49 projects have benefited from it. And you can imagine 1,432 megawatts. People don't give Central Bank enough credit. You can imagine these are people, these are manufacturing companies that are completely, permanently off the grid, and they are guaranteed 24/7 power through off-grid energy. And so, and they are all working, and they are functional projects that are all over. That takes away a lot of burden out of the national grid, and the power is guaranteed. There are turbines, gas-fired turbines that are captive energy that are available for these companies. And the companies are there, there are over about 49 of them that are working. So, and then we still have another 983 megawatts that are on grid, which private sector initiative, which are PPP arrangements that are working. And one of them has already been completed, contributing nearly 400 megawatts of national grid. Again, is intervention funds from CBN that we manage on their behalf. So that is on power alone. On the airlines, we have provided facilities for the airlines through that intervention funds, and the airlines, 24 airlines have benefited from it, out of which 29 aircrafts have either received refinancing for their cost of acquisition. And then the key one is that we finance through that intervention and a hangar for maintenance of helicopters. It's right there at the Murtala Mohammed International Airport, financed from beginning to the end. And a lot of helicopters that ideally that we may have to go outside the country for maintenance, it's maintained in that place right there in Lagos, right here in Lagos. And so these people don't know the level of impact the CBN intervention is doing. Most of the airlines, especially the old airlines that have been flying on the wings of central bank intervention funds. I'm telling you, if not for the intervention, many of the airlines that you fly would not have been flying, because refinancing took place on their loans to make their cost of lending cheaper, and many of them also got new money to buy new aircraft. So that's exactly what has been happening on the intervention side. And the second key intervention that, again, for both, like I said, both of them are all at 9%. Then the second one is what we call Sme Rrf. The Sme Rrf is the rediscounting and refinancing facility for SME loans. Here we have disbursed a total of 262 billion, and 588 SMEs have benefited from it since 2010. 588 project SMEs. So if you add another 15 that we have done also, it comes to 603 in all SMEs. And again, this one is interest is at 9%, and it is the commercial banks that actually have benefited from this for transition to the SMEs. They benefit, of course. Commercial banks guaranteed by providing the treasury bills or bonds, and the funds are made ultimately available to the SMEs to reduce their cost of doing business. The other one is what we call the industrial funds. The industrial funds was created as late as 2018, just 2 years ago. We have disbursed 101 billion naira on this Bank of Industry. And so far, 72 projects, manufacturing companies have benefited from this, 72 of them. And this has given lifeline to so many manufacturing companies. Again, interest is at 9%. The security is a bank guarantee. We have two options. Either if you want a term loan, you can get up to 8 years. Working capital is up to 3 years. This is working, excellently well, running on the wings of the funds provided by the Central Bank of Nigeria. And we have disbursed to the manufacturing companies. Then last one is what we call the textile funds. We have had 2 textile funds we are managing for Central Bank. 2015, just 3 years ago, or 5 years ago, we had what they call Textile Intervention Fund, which is a fund for about 50 billion naira to reactivate textile companies. Those of us who are old enough know that, some 20 years ago, textile companies used to be the biggest employers of labor. That is the dream of Central Bank, to be able to restore the good old days. And so 67 projects have benefited from this, and the interest rate is 4.5%, and the tenure is as long as 10 years. This is to be able to make it easy. And the security for this one, legal mortgages, debenture, main textile companies have really benefited from this, and they are very happy with it. But while that one was running, just last year, 2019, CBN also introduced what we call Textile Revival Fund. The Textile Revival Fund is an improvement on the Textile Intervention Fund. Again, we are managing the funds, And it's been very successful. At this point in time now, this project involves financing the whole gamut of the whole value chain of textile, from cotton farming up to the level of garments. Every player in the value chain is a beneficiary of this program. Starting with farmers, you will not believe it. Central Bank had an initiative that financed over 100,000 cotton farmers and under the scheme. And from there, we finance the ginners, we finance the spinners, and right now we are at the last stage of financing the textile mills. And each value chain moves into another, and ultimately we get to garments. And this is really a revolution in textile industry. And we are very proud to be executing this project on behalf of Central Bank. And it's running at 4.5%, just like the previous program, and it can run up to 10 years. And right now, many textile companies, spinners, ginners, of course, have all benefited from the project. Finally, I want to mention, like the director mentioned at the beginning, that following the COVID development and there was need for palliative, Central Bank again was very proactive, and they offered a reduction in interest rates. So right now, interest rate on all this intervention have come down from 9% to 5% for 1 year. You know, from March 1, 2020 to February 28, 2021. The idea behind it is to provide palliative to players in this sector. Again, for projects under implementation that have not been completed, CBN granted generously a 1 year extension of moratorium from March 1 to February 28, 2021. So this is like the summary of what we are doing on behalf of Central Bank of Nigeria. Once more, I want to thank the governor of Central Bank of Nigeria and his team for believing in Bank of Industry, supporting us, not only seeing us as shareholders of the bank, but also using us as an extension of Central Bank in implementing developmental objectives that are creating jobs, that are intervening in critical sectors, that are solving problems and creating the right developmental initiatives that's moving the country forward. On this note, I want to thank every one of you once more. Thank you, Dr. Popola and the CRC team. And I am confident that the country will continue to move to greater levels as we continue to support in one way or the other. Thank you so much, and God bless you.
Thank you very much, Mr. Aranonu. Brilliant within this time. I'm happy that you are able to give us the summary of what's going on in BOI as far as intervention fund is concerned. I'm happy that you told us that you are the fund manager for the central bank. The central bank is the fund donor. You also monitor the projects that you help to fund. And you gave us at least 4 funds that are currently being managed by BOI: Power and Airline Intervention Fund, SME Fund, Industrial Fund, the one just created in 2018, and then Textile Fund, which now also have Textile Revival Funds. In all of this, you are able to give us how much been disbursed, the projects, the number of projects that have been, funded, and the benefits that have accrued to the economy through them. I knew one other very important information you provided to us is that the interest rate has been reduced from the intervention funds from 9% to 5% for 1 year to accommodate the challenges that beneficiaries will have during this particular period. And I believe that everyone will take advantage of that. There have been some questions that have already come for you, which you are going to help us to answer. One person says they understand you no longer grant OD as part of the working capital facilities, that what you have now is just term loan for asset acquisition, for machinery and so on and so forth. When other questions come, you answer them, but just take note of that for now. I already have over 29, I have about 30 questions that have been displayed so far, but we want all the speakers to present. I also want to announce that quite a lot of people have to join the YouTube, come in through YouTube and Facebook to be part of this conversation. So quickly now, let me go to my chairman and the Chief Risk Officer of First Bank, Mr. Olusegun Alebiosu. He will be giving us his perspective from the commercial lender, their involvement and participation in government intervention for CBN intervention funds. Mr. Alebiosu, sir, the floor is yours.
Good morning, Dr. Popola, panelists, and participants. The truth is that without development finance intervention anywhere in the world, development will be truncated. The truth of the matter also is that the difference between development or otherwise in funding is usually between tenor and pricing. And that is what the intervention funds have done. They provided funding, long tenor, and they have provided funding at single digit. The combination of both is what supports development, and that is what development finance has done, which is great. For us at First Bank, we have always been partners to both BOI and CBN. We have a lot of transactions with them, and we have been supporting businesses. But I'm sure you also know the history of intervention funds in Nigeria, the NEF fund of those days and all those funds that disappeared, that Nigerians took and industries were built. You understand the trust environment that an average Nigerian might likely even take the money and do something else. Or an average Nigerian will also think that they can just do it and then you cannot ask me, I will go to the regulator, I will go to this, I must do this. Okay, and the Nigerian factor all coming into play. As we speak in First Bank, I'm sure if we list the top 10 rice producers in Nigeria, I'm so confident that First Bank must have funded minimum of 50% of those rice producers in Nigeria today through intervention funds, supported them. Because we have to issue our guarantee to Central Bank. They have to be our customer for us to present to them. If you check what is going on the manufacturers fund, I'm sure BOI statistics, if they check BOI statistics, you see how many customers of First Bank we've given guarantee to BOI to support, including, in fact, there's actually a fund that BOI is managing for oil and gas sector. It's a foreign currency loan. We've also assessed that for our customers. On the healthcare, we've assessed for our customer. For one of them is even for kidney transplant, or this renal treatment. Okay, that we are also doing both in Abuja, Lagos. A lot that First Bank has done. Again, but we sat back and ask ourselves, what type of customers should we support? Because an average Nigerian will just say, oh, there's cheap money, oh, yeah, let's go. And everybody will just come with all kind of proposals. When CAC started, I was then in UBA. And all kind of proposals came in. We had over over 300 billion proposal in less than 2 weeks. In fact, we had some people who were in UK who had never been to Nigeria in 10 years, who wrote proposals and said they have farm in Ibadan. They wanted 300 million, 500 million. Because an average Nigerian would just sit down and think that this is money for us to share. I know somebody who can help me get it in this place, in this place. Somebody will talk to so and so person. And for us, that is a real challenge. If somebody can sit down in UK, conjure up a proposal, tell us he has a farm in Ibadan, where he does not have any farm at all, and we know the truth. When we pin the guy down and details, the guy was running over the place. And that is a typical Nigerian for you. You just feel that everybody, next person is a fool, right? And that the government money is there for anybody to waste. And that the bank will go and recover. And unfortunately for us, banks, once we have given out our guarantee to Central Bank or to BOI, on due dates, we must pay on due dates, we must pay both the CBN or BOI. We must pay them. So how do we ensure that you pay us back in such a way that we can also repay the central bank? It's important for us because why should I fund you, give guarantee? The BOI and CBN will not lose a dime. What they've just done is to make this fund available. The credit risk stay with the banks. So if you default in paying, it is the bank that will refund that money to BOI or central bank. So if I'm the one that I'm going to refund the money if you don't pay, why should I back the person that cannot pay? Why? So that is why it's not risk sharing. It's not that central bank will take 50% or BOI will take 50% and I'll take 50%. No, I'm taking 100% risk on you. And what am I getting back? What is the return to shareholders? If I do guarantee to BOI, is 1%. Annually, AMCON will take 0.5% of that 1%. So what comes to me as a bank, with all the risk I take on you, is 0.5. If you now default, I will now pay 100% of that money back. So where is the business? So it must be a customer that is so good, that is so viable, for me to put myself forward and say, okay, let me back this customer is viable, to support the economy. When if the factories are built, people will get employed, the country will survive, there will be foreign exchange savings for the country, there will be employment, there will be tax for government, there will be industrialization. So banks are actually going out of their way to support this business, not because there is anything so much for them, because the yield is negative. I mean, it's not something that is, but because it is part of what we need to do. But it's the unfortunate aspect of it is that when I have to now pay on your behalf for defaulting, I will not have to come and recover from you. So if it is something that cannot recover, or it's a business in one village that nobody is willing to buy, or nobody is willing to come to the village, so what do? I have some in poultry now for the last 4 or 5 years that they have not done anything. We have some that actually, just believe that that's just the way. So the banks will have to devise means to say to ourselves, it's only the best of all customers that should benefit from intervention funds. So the first thing is that you must be a very good customer of my bank. 2, you must have good credit history. 3, it must be in a sector that is developmental to Nigeria. And you must have been in that sector. You can't just come overnight and say, you want to go and do power, and you come and bring money for power. You can't just come and say, you want to go and set up a tomato plant, when you don't even know how tomatoes are farmed. You don't even know how the process is. You can't just walk to me today and say, oh, I want to go and build 1 billion plant to do textile, when you don't even know how textiles are run. And that's what you see that Nigerians want to. And you say, oh, banks are not supporting. Banks are not supporting. There's no way banks can support if you have not presented yourself in such a way that your business will be viable. Because truly, let's ask ourselves, if CBN gives you or BOI gives you money at almost free, 7%, 9%, 5%, and you still default, so what will you do well? Let's ask ourselves, this is a practical question. If CBN, BOI, Bank of Agri, they give you money a single digit for good tenure with good moratorium, you still went ahead and defaulted. Okay? So what will you do right? Can we blame government? Can we blame environment? But this is the same environment that foreigners will come in, they will build the same factory, they will do well. Why will it be you, Nigerians, most times, that we won't default? Because what we have seen is that most foreigners that are established in Nigeria, that are doing their businesses, they're actually doing far, far better than our people. and you see them living frugal life. I'm not sure I've seen any of them with private jets. I mean, all those big multinationals, I've not seen any of them with private jets. But people who does not even have 1/3 businesses that they have, who want to use my money to go buy private jet. And those are the big problems we have as people. And those things also clear to we banks. So we support development finance. We support intervention funds. We know the impacts. We are seeing them every day. Even from the rice, for example, I was so happy over Christmas when my customers said they don't even have enough to sell, that people are looking for rice everywhere. I was so happy that at least I'm a Nigerian. We supported these people from Kebbi to Nasarawa to Niger to Kano to Kaduna, everywhere to Katsina. All those locations we did all. And they can't have me. They can't meet Nigerian needs. Some state government even gave them money in advance. They couldn't deliver. Now they are thinking of second plant to expand. We are going to support that expansion. That is how a country is built, and that's exactly what we should do. It's so important for us. And the first principle is for us to change the trust environment. Once we do that, I think intervention fund will succeed more and Nigeria will grow more. Thank you very much.
Thank you very much, Mr. Alebiosu, for the very wonderful insight you have brought into this. He has given us the participation of First Bank in this, especially in the area of agriculture, rice production, and manufacturing. He has also told us the essence of the intervention funds, how people could take advantage of that, because the pricing is much more favorable than what you get in a normal commercial bank setting. And that's why they promote their customers to access it. But he also has talked to us about, the concerns and the challenges they have. And some comments have shown that you are just on point about, people thinking is just like I mentioned in my introduction, is national cake. They don't want to pay back and so on and so forth. So I guess we will have more comment on that later. People want to know from you at what rate they will be able to get it. People also say that as your customers in First Bank, they don't have enough awareness about how they can access these funds. So maybe you take those 2 points and then you respond to them later when we get to Q&A session. At this stage, okay. I show them bringing my last speaker for the day, not the least speaker. Let's have the bankers have spoken, both the central banker and the development banker and the commercial banker. They have all spoken. Now is the business side that we want to listen to. And there is no other person that is eminently qualified to do this than the Director General of the Lagos Chamber of Commerce and Industry himself. He interacts with businesses every day. And so we want to hear the perspective of business from where he sits in the chamber. So Dr. Muda Yusuf, the floor is yours, sir.
Thank you very much. It's a pleasure to be on this platform. I had wanted to share my screen, but I don't think I have that enablement to share it. I'm told that I cannot share the screen. So I will speak to my presentation very quickly.
You'll be able to share it now. Can you try again?
Okay.
So just put it in presentation mode. Yeah.
Okay. Okay. Now, well, first let me commend CRC Credit Bureau for this opportunity. Let me also commend the Central Bank of Nigeria for its resolute commitment to development finance and economic diversification. Just as other speakers have said, development finance is critical to economic diversification. It's critical for job creation. It's very important for economic sustainability. And it's also strategic for social stability. Now, the justification for development finance. From some of the earlier presentations, there were some comments that does not reflect the full appreciation of the gaps in financing that we have. We have very huge financing gap in the economy. And I believe that the whole concept of development finance has been very useful in trying to fill these gaps. It's not able to fill it completely, but at least there has been some impact in trying to fill the gaps. And this justification arises from the fact that there is difficulty in accessing funds, especially for real sector and SMEs in many of the conventional banking systems. There is an issue of high cost of funds. We also are confronted with the issue of short tenure of funds. These are critical factors that necessitate the need for development finance and these intervention funds. Cost of funds generally range, depending on when we are talking about, from 15% to 30%, depending on the profile of the borrower. Only recently we had a significant reduction in lending rates, but before now, the lending rate has been very, very challenging for businesses. And even for microfinance banks, it could be as high as a monthly flat rate of up to 5%. So when you annualize that, you are talking about 60% per annum. This is the kind of cost of fund that all these small businesses pay because they don't have access to the regular mainstream sources of funding. And this rate could even be higher when we are talking about finance companies and informal financial markets. Rates in those areas are even very, very atrocious, very outrageous rates. So all of this is making it difficult to fund manufacturing, to fund agriculture, to fund real estate, to fund infrastructure, to fund mining, to fund aviation, to fund health services, to fund educational services, because these costs are too high. Any investor that takes this kind of funds at such a high rate and attempts to invest in all these areas is taking a very big risk of business failure. This is perhaps why we have all these challenges of, people not being able to pay, high default rates, projects ending up with AMCON and all of that. So the high cost of funds is a major issue in the economy, and it's a major justification for the development finance institution that we have. Then the tenure of fund is another major constraint that we have in the economy and in business. In the average or in the normal commercial banks, you hardly can find long-term funds. Again, we are not blaming them because it is what they have that they can give. So the tenure of funds are generally short, mostly less than 3 years. Close to 80% of the funds in the commercial banks are less than 3 years or even 2 years tenure, which creates a challenge for real sector financing. It creates a challenge for funding of long-term projects. A few entrepreneurs that have tried to take these funds and fund long-term projects, most of them regretted it. And even the banks also paid dearly for it. Because some of these funds, some of these assets became bad, and there were all sorts of, some of them ended up with AMCON. So these are challenges we face in business because the tenure of funds are very short. Then there is the access to funds. There are demand side issues. In terms of accessing funds, I've seen what the moderator said about some of the questions that people are raising, but there are demand side issues. Demand side issues, what I mean by that are people who are asking for the credit. What challenges do they have on their own? Many SMEs face the challenge of access with regular commercial banks. Many of them don't have the collateral to support their requests. Many of them have poor documentation. They don't have quality financial records, which poses them or which makes them look like high risk profile. Of course, we have the high risk profile of SMEs. SMEs are generally perceived as high risk. There's also a high risk profile of the risk sector projects. Even though the development finance institute or development finance institutions are focused more on risk sector and some of these projects, the reality is that the risk of investment in those sectors are also very high, which also contributes to the problem of disbursement for some of these funds to these sectors. Then there's the issue of the difficult business operating environment, which elevates the credit risk in the economy. Sometimes businesses fail not because we don't have good entrepreneurs, but sometimes because the environment is so difficult, for people to make their businesses sustainable. Then there are also supply side issues. Supply side issues are issues that relate to those who give the loan. Banks are generally risk averse. They don't want to take risk. In fact, it takes a lot of intimidation and force by the central bank to get some of them to lend to some of these sectors that are considered high risk. Some of them feel that there is high opportunity cost of lending to risk sector and SMEs compared to other investment windows. In the days when we had a high yield in terms of returns from treasury-based, federal government bonds, foreign exchange, and all of that, investing or lending money to risk sector to SMEs is like a sacrifice as far as the banks are concerned. And you can see elements of that even from the last presentation, that what the banks are getting from some of these things are not so satisfactory. Then there's high risk exposure in lending to risk sector and SMEs. There's also limited understanding of some sectors by credit officers. Credit officers in many banks don't even understand some of these sectors. So how do you lend to a sector that you don't understand? So they rather go to the comfort zone where they are comfortable with, go and buy treasury bills, give money to some big multinationals, and that's it. But they don't even understand many of these sectors. And this economy is so diverse, we have so many sectors that are doing well. But because the banks don't even understand the sectors, when proposals are made, they cannot support it. Then there's also the high credit risk borne by the deposit money banks. The last speaker mentioned this. If you want to support businesses, if you want to divert the economy, you want to support the real sector and long-term projects, the banks cannot continue to bear the entire risk, credit risk of this lending. If you continue to have that, then we continue to cope with the reluctance of banks to disburse the money, which is what we have had with all the manufacturing intervention funds, so many funds that the banks are not disbursing because they are also very cautious. They have to bear the entire credit risk, then it's not easy for them to disburse so easily. Way forward for CBN intervention funds. There is need for regular impact assessment studies to ensure that the desired outcomes are achieved. It's not enough to just disburse funds and real out figures. It's important to measure the outcomes so that we know that we are actually achieving results. There's a need to expand the scope beyond agriculture and manufacturing, which together accounts for just about 30% of GDP. Development finance, CBN intervention funds are too focused on agriculture and manufacturing. There are other sectors of the economy. We need to focus more on service sector, which currently accounts for over 50% of our GDP and more than 80% of non-oil revenue. So we need to shift, this mindset that it's only the real sector that can make the economy grow, that can create jobs. We need to shift from that and focus a lot more on the service sector. And many of them are doing very well. There's a need to also give more accommodation to working capital. Development, finance, and intervention funds are too focused on asset acquisition. I've seen manufacturing companies, they have all sorts of machineries, they don't have working capital. So they keep running from one bank to the other looking for working capital. So we have to have a good balance between supporting them to acquire assets and also supporting them to run the business. Many of them, the biggest problem they have is the working capital. It's not so much the machineries or equipment. So there's a need to revisit that and see how we can review the way we operate. There's already need for due diligence to reduce the level of loan defaults in development financing. A good example is the Young Borrowers Program. The level of default is very high. Many of these people see it as a national cake and all of that. They take the money and they disappear. And whereas these funds are supposed to be revolving funds. So we need to have some due diligence and better framework of risk management in the way we disburse these funds, so that you can make it truly a revolving funds. There's also a need to put in place a robust de-risking framework to give more confidence to deposit money banks to be able to lend to investors in the economy, especially the SMEs and the real sector. If you don't de-risk the environment, the banks will be very reluctant to lend, even if it is intervention funds, which is the experience that we have had in the past. There's also a need to review the credit risk allocation between the CBN and the commercial banks. I've already discussed that. The commercial banks cannot continue to carry the entire risk, especially if you are pushing them to go to areas which are perceived to be risky areas. There's also a need for an indigenous window in development finance. Now, the last speaker was saying that the Nigerians investors, they are not as good as foreign investors and so on. Let me say this. Many of these foreign investors also have some support from their home government, which our own indigenous investors don't have. And we have a responsibility to give special attention to our indigenous players in all these sectors. Foreign investment is good. I'm not denying that. We have many of them in the chamber. We need to encourage them. But we need to give special attention to indigenous investors, because ordinarily they cannot compete with foreign investors. The bulk of the funds in development finance institutions are going to some of these foreign investors. I don't think that is fair to our indigenous players. They may not be as good, but we have to be more tolerant of them. There's also a need to have a more inclusive loan disbursement process. The recent 50 billion MSCME COVID support fund was disbursed only by NASA Microfinance. We feel that if we have broadened the scope and bring in more financial institutions, even if they were microfinance, I think that would be a lot better. And we also need to ensure that we have better geographical spread of these intervention funds. There have been complaints that these things are skewed to some sections of the country. So that impression we need to remove by reflecting some kind of federal character in the way that these funds are located. Practically all sectors of the economy have SMEs, they have manufacturing, they have agricultural projects, different kind of agricultural endeavors that also require support. So we need to worry about this kind of sensibility. So thank you very much for listening. I hope I've not taken too much of your time. Thank you.
Beautiful, beautiful. Thank you so much, Dr. Yusuf. You are on time. Thank you so much. You've talked about so many things on the need for intervention funds, and then the area I enjoy most about your presentation is on the way forward. And most of the issues you touch on the way forward is like you are just talking about the minds of a lot of questions that are coming here. So basically, it's like a lot of your recommendations will be part of the conversation we are going to have in the next 20 minutes before we close this session, because a lot of questions revolve around the issues you have raised. I really want to thank you so much. So the way we are going to go now is we're going to go to question and answer session. I have about 55 questions already, apart from those that are in the chat box. So I will just speak from, I will give about just 5 minutes or so to each of the speakers to respond to some of the questions. I will post only about 2 or 3 questions. I just summarize them as much as possible. And then we go back later to see some of the questions and see whether we can get you to answer them and post them back to those who asked them. There's no way we can deal with all the questions here. The good thing is that some of the questions are just the same from so many people. So let me start from Dr. Zeb from the Central Bank. There are so many questions for fun. In fact, half of the questions are for you and Mr. Aranunu. So
it's okay.
Yeah, so let me just ask you just 3 of them. The first one is how do I access non-interest intervention funds? So please put that down. How do I access non-interest intervention funds? That's the first one. The second one is that people said that they said that in all these intervention funds we have mentioned, there's none for the youths.
Okay.
So that's the second one.
Okay.
Then the third one is talk generally around how can people access? Because now we listen to BOI. BOI has told us that they are the managers of your funds, so they can be accessed. There are other people are asking, for instance, the microfinance banks. Some of them have asked, why is it only National NFB you are using? Why not them? And I think Dr. Yusuf has also mentioned that
yes.
Issue around not engaging so many other financial institutions in the management of the fund. So maybe if you can attend those three questions.
All right. Thank you, Dr. Pobola. First of all, for the non-interest fund, the CBN announced 2 weeks ago that we have non-interest window for most of our interventions. I will advise the person who asked the question to approach any of the non-interest banks. Some conventional banks have a non-interest desk, but it's usually easier to approach banks like Taj Bank, banks like, the non-interest banks that have been licensed yes, all of them. We have published guidelines for non-interest window for all our interventions. The next question was on youths, that a lot being said. If 65 to 70% of our population are made up of youths, what is CBN doing about interventions to cater for this segment of the society? Well said. You recall we had the YEDP, which is the Youth Entrepreneurship Development Scheme. That scheme was tweaked, and that's what gave rise to the AXMIS of today. Frankly speaking, AXMIS is entirely for the youths. You are aware that banks set aside 5% of their PAT on an annual basis, and we use it under the auspices of Bankers Committee of Nigeria to fund youth businesses, where we provide both funds for acquisition of assets and working capital. The next question was access generally to CBN intervention. I'll be frank with you, in all the sensitizations we do, we realize that a lot of people who are eminently qualified for our schemes don't get access to these funds. Well, I'll start by saying, if you were a commercial bank or a microfinance bank, and somebody who has good credit standing walks to your bank, and you can either lend from your balance sheet or lend under the CBN windows where you charge only 9%, and then the bank makes only 6%, and then when you lend from your balance sheet, you can charge as much as 25%. So the question is, if you were the banker, which product will you sell more? I think that this is a no-brainer. Most banks will sell loans from their balance sheet. So let Nigerians understand that access to these loans will be, you have to make an extra effort, go for information, visit the CBN website. If you are qualified for any fund, go to your bank, apply for it. You know, credits are not really like going to the supermarket and buying a box of chocolates off the counter. There are conditions. You heard the chief risk officer speak about on due date, if that loan is not paid. For us in the central bank, is just to go to 4th floor, debit the bank and recover the money. So people need to understand that there are eligibility criteria. Some loans that are above a certain amount, you need to drop collateral. And when you drop the collateral, if you don't pay, the CBN will debit the bank. So I encourage everybody, there are an array of over 25 intervention schemes currently going on. And according to McKinsey, in 2013, the financing need for MSMEs in Nigeria is well over 10 trillion. So that is, you're speaking about Nigeria's entire budget for the year. The CBN's balance sheet cannot carry this. So not everybody who needs intervention will access it. The primary responsibility for granting loans are the banks. We are only intervening because we have seen that the banks have done this unsatisfactorily. like many speakers have alluded to, they will learn in their usual areas, trading, will be financing China. So the CBN is intervening. Will crave your indulgence to be patient, continue to push. When it is apparent that you are eminently qualified and your bank is not granting you access to those interventions, please write the Director, Consumer Protection Department, or the Director, Development Finance Department. I can assure you that your case will be taken up. Thank you very much.
Thank you very much, Dr. Chinedu Zef. That's very incisive. I may come back to you again for second round, and
yes,
when you are trying to close. And during that second round, you may have to talk around the kind of monitoring and control strategies that you have in place for them. And then if you have anything, do you have anything for gas and then housing?
Yes.
Yes. That and then housing sectors.
Yes. So, yes. Last week, the CBN rolled out 3 interventions, one for the housing sector, one for the gas, and a third one for solar. We have rolled out these interventions for people, particularly the solar intervention is for people to acquire solar panels in areas where the national grid has not reached. For the gas is for companies to pipe gas and use alternative sources of energy. And then for the housing is to provide housing under a structure, provide housing for Nigerians under a structure whereby these loans will be recovered. You know, this forum will basically create the awareness. I will urge people not to end at this forum. Thank you so much, CRC Credit Bureau. But beyond that, you have done your part. I expect all the listeners to now visit the CBN website, read through the 27 interventions, find out the ones that appropriately suit your financing need, print it out, approach the bank. Don't expect that the banks know. Many of them don't know, like so many speakers have said today. They don't know. Go with a copy of the document and then the conversation starts. And don't fail to get across to us where you think you are being marginalized.
Thank you. Before you go, they said you didn't answer the question on the sideline of the microfinance banks.
Great. Thank you very much for taking me back to that. You see, you know, ask yourself this question. If the banks have been lending to these critical sectors as much as they ought to, we have no reason being there lending, creating our own, putting our investment in a microfinance to do this. Having said that, the truth of the matter is that COVID came on us like a thief in the night. When we saw ourselves under that challenge around February, March, all the central banks in the world were in a hurry to save their economies. I do not think that that would have been the best time to begin to fashion out eligibility criteria for disbursement of the TCF. So I quite agree with you that under that TCF, we should have expanded the participating financial institution base to accommodate other microfinance banks, like we have in other interventions of the bank. And just for me to mention to you, the MSME Development Fund of the CBN, several microfinance banks, up to 150, participated under that. So why not this? It was just because it was brought out quickly to fight and combat the effect of COVID on Nigeria. In the weeks ahead and perhaps months ahead, we will see the central bank properly bringing out the framework for other banks to participate in it. But the truth must be told that we have seen a situation where most of these banks are businesses. They rather sell products from their balance sheet than sell the ones that they make little money from at the expense of the entire economy itself.
Thank you very much, Dr. Zef. So many questions. We now have 70 questions.
We can't take all.
Let me go to Mr. Aranonu now. I may have the opportunity to come back to you again in your rounding up, speech. Mr. Aranonu, I've given you some questions before. First is that people said you no longer grant OD as part of the working capital facility. And I know Dr. Yusuf Muda Yusuf also mentioned that. So is that true? And is there a window for working capital? Then some people say the collateral that you're requesting them to put down is unrealistic. And then you have mentioned 4 key intervention funds. Some others are talking about services. I have someone specifically talk about human resource company. Can they benefit? Is there any fund for them for that? If you cannot answer that, maybe Dr. Seth will add that to his question on issues around for services, which Dr. Muda Yusuf also raised. A lot of questions have come around that. Questions have come around any specific one for the youths. I mean, you have answered that. For women, gender-based, for instance,
Yes.
there have been questions also around that. So let me then generally also then, Mr. Araronono should round up responding by telling us again how people can access the forms that you have at BOI. Thank you.
Thank you so very much, Dr. Popola. The first question has to do with whether why Bank of Industry is not providing working capital facility. The answer is very simple. That question is not the correct situation. Bank of Industry finances working capital. Indeed, we provide for every customer of ours, we not only finance term loans based for acquisition of plant and machinery, we provide complementary working capital. When we lend money for up to 8 years or 7 years or more, depending on what the cash flow can support, we also provide complementary working capital. And indeed, our working capital lines are much more friendly than the working capital you are maybe accustomed with. The normal working capital you will get elsewhere will be for 1 year. Our working capital lines are normally for 3 years. And and not only they are there for 3 years, you will have a period of moratorium when you are not supposed to pay anything at all. So as you know, we are set up to support manufacturers. And if you remember, when I was mentioning intervention funds, I also mentioned that the funds provide not only for equipment, but also provide for working capital. So, and if you remember very well, when I was talking about even the textile funds I spoke about earlier, has a provision, and I talked about the 100,000 farmers that were involved. What they got was working capital. It was not plant and machinery. The CBN did not buy land for them. It was, they got working capital and they were able to be to plant, and and they got reward for their labor. So indeed, both Central Bank and Bank of Industry, even with our own products, we offer working capital facilities, and we definitely do. We as a complementary service to plant and machinery financing. So again, the other question has to do with the issue of security. That our security is stringent. The truth of the matter is that I think it was Zef that was Dr. that was mentioned, Dr. Zef that was mentioning that money is really not like walking into a ShopRite and buying an orange juice. The truth of the matter is that the bank has to be assured that, one, that the customer is capable of paying back, and number two, that if in the unlikely event that the customer cannot afford to pay, that that's a fallback position, because like the chief risk officer of First Bank mentioned, we have ultimate responsibility to return the money to the fund owners. So there's nowhere in the world where you lend money, absolutely, especially large sums of money without security, because that would be a recipe for problems. And so, however, we have different kinds of securities. You had me mention some treasury bills in some of them and bank guarantees. But indeed, for the textile funds, for example, we do provide, well, we take legal mortgage, we take debentures, all our textile customers, they are borrowing from us. Both BOI funds and CBN funds, all of them are covered, secured by legal mortgages or debentures. You know, indeed, what you may not even know is that for BOI funds, when you are borrowing 10 million naira and below, you don't need to bring any legal mortgage. You don't need to bring,
just use Google Maps to search.
You don't need to bring any debenture. What we take is just a written paper, a guarantee of some category of class of people in society that we have defined. If you are borrowing 10 million naira and below from Bank of Industry. So we are flexible. No, but like Dr. Zeb mentioned, the higher the amount, you know, if somebody wants to borrow 1 billion or 5 billion, you cannot say you will lend to the person without security, which is why I said it is graduated. Now, the other question has to do with you know, provision for loans for people in the different areas like the youths and women. You know, I can tell you, many people again surprisingly do not know that we have, if you go to our website, Bank of Industry website, we have 2 major programs we floated for youths, and it's for lending. And many of them, we showcase them on our television program, BOI Impact, you know, every Thursday, every Tuesday on channels. You know, we have a program we call GEF, Graduate Entrepreneurship Fund, which is a program we actually created, you know, for youth corpers. You know, we have agreement with National Youth Service Directorate, and they organize exams and tests for people who have, you know, good business ideas. They write feasibility studies, and we select those who have good business ideas. Again, there's no tangible security required. All you need to do is to get guarantee from anybody who we define is like a responsible person in society who can stand as a surety for you. Doesn't need to bring any cash or any legal mortgage, and we lend them money. And the beauty of the monies that we lend to them is that before we lend them money, we send them for training to build capacity. We have agreement with entrepreneurship development centers in Nigeria. We train them in Kaduna Business School. In Lagos, we train them at Lagos Business School. We signed agreement with EDCs all over the country, and we train these people at our own cost. After they have acquired capacity and skill, then we release money to them. And all the success stories among them, we normally show them on television, on our TV programs. So we have that. And we have again what we call ESP, another youth program, Youth Entrepreneurship Scheme. You know, that one is for those who have finished youth service, okay, but they are looking for jobs. And they are between the age of 20 and 32. So 35, sorry. In that group, if you have finished your service, again, if you can apply, show us what you are able to do, you know, and then those who pass undergo through the same process of training and at our own cost, and then we lend them money without asking for tangible security. Okay, again, the success.
Let me stop you. I'm sorry. We have only 10 minutes left, and I still want to get your final. So maybe you can give us your final thoughts, and then I'll move on because there are 2 other speakers who also have to respond to questions.
Yeah, no, my final thoughts is that indeed the collaboration between Central Bank, Bank of Industry, and the commercial banks have been very, very, very fruitful. The impact at the macro level can only be measured by looking at statistics of the impact all over. And the impact is very massive. I gave an example about the power sector, for example. What the success in the power sector indeed makes it easier for you to have power today. That's exactly, you may not have the direct impact, but ultimately, if you do take care of the grid and get people off the power, manufacturing companies off the grid, then you have more power in your homes. And that's how every sector has been affected. And we are glad to be a part of the whole program. Thank you.
Okay, sorry, before you go, do you have window for non-interest finance also in BOI?
We don't have license for that yet. Like Jeff mentioned, there are banks that are licensed for non-interest banking.
Right. So,
yeah.
Thank you very much. So let me quickly go to my chairman, Mr. Lebiosu. We have just about 8 minutes to go, but I want to give you about 3 or 4 minutes. At what rate do you give your customers these intervention funds that have come to you? And then people say that most of your customers are not aware. Why is it that through your branches, people don't have this kind of information? How can you make sure that they have more information awareness creation through your bank? And then the final one is, apart from government funds, what other ways has First Bank been making funds available for SMEs in your bank?
Okay, thank you very much. The intervention fund rate is the rate given by either BOI or central bank, the provider of the fund. We can't change it. It is regulated. So if CBN comes today and says it's 5%, it's 5%. If it's 9%, 9%. It's a sanctionable offense if you go above their rate. And in fact, the offer letter you give to the customer must be submitted to central bank before they can even give the money. Okay, so also BOI, you must see what you must see what is going on. So we cannot do anything different from what they've done. And for BOI, most time we even give only guarantee. BOI takes the interest. It's not we only give guarantee. So there's nothing coming in for us. It's not like we will charge anything for that. On the awareness, I think any customer, if you approach your branch manager cannot say he or she is not aware. So branch manager say he or she is not aware. That would be interesting for me to hear. And I'm sure we have First Bank complaint box. We have First Bank customer interaction, First Bank platform, Twitter, that you can actually reach us. But it's available because there are flyers in-house advertising this. Even before CBN came with the healthcare program, last year, First Bank started its own healthcare program before CBN started this year, because we realized opportunities in the market and we went in. But as commercial banks that will take deposit from customers, we pay NDIC premium, we pay AMCON charges, the CRR, we can't lend a single digit. I mean, when you give me your money at 4%, 27.5% of that is in CBN. I adjust for it, add NDIC premium 1%, add AMCON charges 1%. So what you see is that I'm already gone before you put my overhead. So I can't do single digit. So when you see single digit, it's coming from CBN BOI funds that we are just on lending to you. So, and that's exactly how it works. We have funds on our own. I mean, we try to, as much as possible, to all the time we're trying to organize a pharmacist, so we can also help with that. It has been a concern to us that most of the drugs in Nigeria today, common malaria drug, you see India there, imported from India, Pakistan. How can we be in the country of 200 million people when we know that malaria is the #1 disease, and we don't have, and almost 90% of drugs for malaria in Nigeria are imported from China, from India. And we have pharmacists, pharmaceutical companies in Nigeria. And we have even observed that drugs produced in Nigeria are more potent than the one. Anything that drug fields produces. if I have proven all the time to work better than those imported all the time. So it tells me that even if pharmaceutical companies can be enabled to produce well in Nigeria, we have thriving industries. Practically, we don't even have anybody producing antibiotics. We have to import all this one from India. Malaria drug, common malaria drug must be from India. Common skin rash, this you say India. So what are you producing in Nigeria? And that's one of the reasons why for manufacturing sector, we are focusing on pharmaceutical company industry. We have not seen many of them coming forward. There are few that are coming forward. But we want to see many of them coming forward because we must produce drugs in Nigeria. The biggest problem we have on our street today is adulterated drugs. You will be sick of malaria. You take 10 tablets before you even see sign that you are getting healed. And it's something that we need to look at as Nigerians. So our first bank is there. We have funds for all kinds of things, but our funds cannot be at 9% because I have cost, regulatory cost. I have deposit rates that I need to pay. But CBN, BOI intervention funds, we act as as backstop, and we share and we take the risk. But if I'm going to take the risk on your behalf, it must be a risk that's worth taking. You agree with me that you can't default, and you want me to take your default. You want to access loan, you don't want to give me collateral, or you are not even capable of taking the loan. How? I just paid BOI one loan last month. They called my guarantee for a project in Benue State. And it's simple. Because I want to produce table water. Table water. And people are drinking everywhere. The man defaulted.
So
you can imagine Nigerians.
I will have your final thoughts.
So the thought here is that banks are willing to support intervention funds, but Nigerian businesses must know that the trust environments must improve. Thank you very much.
Very much, sir. That's a very nice one to respond to all the issues. So I go to the last person, not the least, Dr. Muda Yusuf. You've spoken the minds of the people, so you don't have much questions from people. I just want you to give us your final thoughts, and then probably let us know what has been the experience of your. Is there any other experience you want to share with us among your members in these intervention forms?
Well, thank you. Well, basically, what I have to say about the experiences of our members are part of the things that I've already said. I'd like to say for emphasis that beyond even issues of financing, we need a deliberate policy to support indigenous investors. This is not just about just looking at just the balance sheet of companies. Nationalism is key. I'm not saying we should go to the extreme of it, but we should know that indigenous investors and foreign investors are not playing on the same level field. So there has to be a deliberate policy, a deliberate investment policy. And the development finance policy has to be part of it. Of course, there are bad indigenous investors. There are also very good ones. Let's prop them up to be global players. I think it's doable, and I think we should do that. I need to emphasize again the need to broaden the scope of development financing. The economy is not only about real sector. Real sector is important, but any sector that is creating jobs, that is delivering value, that is giving revenue to government, deserves support. Then issue of geographical spread. This sensibility, we need to address it. We don't want to have a feeling that these development funds, intervention funds are skewed to a particular section of the country. Then the issue of working capital, the BOI BD has said that they give working capital, but we need to deepen it. Because if you look at the ratio of working capital to capital for assets, it's likely to be very minimal. And when people already acquire assets, they need to make the assets functional. And you need working capital to do that. Then the credit risk issue, many bankers have complained about this. And in a subtle way, I've also got a feeling of that even from what Mr. Libios has said. The banks cannot continue to carry the entire credit risk. Otherwise, it will impede the objective of development finance. Then we also need to de-risk the entire environment. The credit bureau community have a big role to play. When we de-risk the environment, it makes it easy for credit to flow to all these other sectors. So I think basically those are the things that I have to say. I must thank you very much for the opportunity of sharing my perspectives on this platform. Thank you.
Thank you very much, Dr. We're already 2 minutes above our time, so I have to be rounding up now. First of all, I want to say that as a credit bureau, PRC, we have just taking it off from where Dr. Yusuf left. We have responsibility to play in this entire process. Our job is to engender trust and confidence in lenders to be able to disburse funds to those who deserve them. And so as borrowers, let us try as much as possible to have clean credit history. Wherever we do transactions, let us make sure that we comply with the terms and conditions. When we take loans, whether it's intervention fund or it's a normal loan, or whether even we buy things on credit, let us make sure that we fulfill all the obligations, because all this data come to the credit bureau. And whenever lenders or creditors generally want to, profile you, they will always come to the database of CRC. And so if you have taken something, you've taken a loan somewhere, you didn't pay back, or you've taken one intervention fund through BOI or through First Bank or through NASA Microfinance Bank, and you didn't pay back, clearly you can't enjoy such facilities moving forward. You cannot enjoy the intervention funds moving forward. You cannot also enjoy even normal credit facilities moving forward. So it's important that you make sure that you live up to expectations when it comes to financial transactions, as the case may be. So as CRC, we keep on working with all the financial institutions to make sure that all these interventions, because we believe that some people take the intervention funds, and this is the first set of loan they are taking in their life. Their businesses have never taken any other loan from any other bank. And so when they do that, and they do well with it, then they can use that opportunity to mainstream into normal commercial bank lending in the future. And like I said at the beginning, if somebody pays back government funds, which is intervention funds, then it's fair. Every bank will believe that such a business will normally perform well when they advance them loans and facilities. So this is the area for us. And people should go to our website, or you should take your telephone and download the CRC mobile to be able to access your credit report to see what is there as we speak. And then you can then come back to us or go back to any institution where you have issues around your credit report or credit score, and we'll help you to fix them. So that's it. As we are closing, we have about 1,500 participants that have participated in this interesting session across the globe. And most of them, we have about 500 on Zoom and over 1,000 on YouTube and Facebook. I want to thank every participant for being part of this interesting conversation this afternoon. Let me thank our speakers, the Director of Business, Development Finance, Central Bank, Mr. Philip Yila Yusuf. We really want to thank you. Dr. Chinedu Zeb, we thank you so much for the very erudition that you brought into the presentation that you have made to us this morning, and also help me convey our very special regards to the director for being there here this morning and for also giving you to us to be part of this session. I want to thank my chairman. Maybe I will thank you last because this is your program. Let me thank Mr. Aranunu. We gave him very short notice, and he was very ready and willing to be part of this conversation. We say a big thank you, and we thank you for the good and wonderful job you people are doing at the Bank of Industry. Dr. Muda Yusuf, we are partner in the economy in Nigeria. So, and I'm so happy and glad that you are able to make it, and you are able to give us the insights from business from business's perspective. We want to say a big thank you. I want to tell you that we will review some of the questions again, If there are specific ones that we want you to attend to, we will bring it back to you so that we can send it back to those who asked them. Let me also say that for all the slides that have been presented, everyone that participated in this session, we have your email address. We'll send them to you. We'll also find a way to let them be at our website so that you can read them up and download. And we'll be ready to help to move the conversation forward. People have requested that the Q&A time is too short. Maybe next time we'll create a good 1 hour for the Q&A so that we can have more robust conversation. Let me then thank my chairman, Mr. Olusegun Alebiosu, for being part of this event and for keeping us, supporting us in and out of public glare that we are like this. My team members, Peggy, Chukwumanwosu, Oluwatobi Alaka, Emoluwa Jidonu, a wonderful team that put this together. Is a very huge success. I want to really thank you. I want to thank all of you for this very beautiful session. Maybe by October, end of October, early November, we'll be bringing you another session. I want to thank Yusuf also for the creatives that have been developed because all this background that you are seeing, we have a designer who is in charge of that. So thank you so much, everyone. God bless you. Bye-bye.